You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon's Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Wow. This has been just a great day today. I have had a really good day, and I want to thank you all for helping that happen. We had a great class this morning. I really, truly enjoyed this one. This was the new science of retirement investing. We'll do it again down the road because it was really fun. And we spent like an hour and a half with people answering questions, which is my favorite part. It really, truly is. It's my favorite part. It's why I love doing these podcasts so much. This is just great. Well, so in addition to that, I got some really good medical news. I'd had an aneurysm. I don't like you guys care. But they said it was probably congenital, but they didn't know. So I've been tracking it for years and years and years. And now it's been 3 years since I last checked. It's gone. It just went away. They said it might. And it's been a great day. I'm really excited. I'm also really excited because I just put up on Talking Real Money a new way to ask questions on the podcast. I wanted to test it and see how it worked. It's a system whereby you can record your question right there from your computer. And I wanted to see what it sounded like. So I got my first call there, and wow, it sounds really good. And I got to tell you, for those of you who use your computer a lot, you can even do it on your iPhone or your iPad or any of those, your Samsung phone, whatever you have. You just go to Talking Real Money, hit the contact button, and then there's a little microphone in the left column. You click that and you record your question. And it sounds awesome. So I'm excited about that. I'm excited because we've gotten tons and tons of questions. I think that's because of the newfound popularity of the show, in large part, I believe, thanks to my appearance on Stacking Benjamins, the podcast. So it's just been a good day. Overall, a good day. Thanks for being a part of it with me. And what we're going to do right now is, since we have, again, so many questions, is we're going to start with that called-in question, just because I want you to hear how good it sounds, and I also want to answer the question because I think it's a great way to start the show on one of my favorite topics, annuities. Well, look at you. Look at you. Look at how well you did analyzing this thing. You are absolutely, positively correct. This is not worth doing. And you missed one of the biggest reasons why it's not worth doing. I'll tell you that one. Okay? But you got it right. It's $350 a year. Absolutely correct. You're going to avoid taxation on $680 for a while. You don't get out of it. It's just deferred. You see, annuities aren't tax-free. They're tax-deferred. And there's a rub. And it's a big rub. If you're invested in an equity index fund, and by the way, I would go, if you're with Fidelity, I would go much broader. I would go the total index and the total international index to get broad global diversification for the equity portion of your portfolio. But if you're in those primarily for the growth of the principal value, not for the dividends. 2% dividends. It's nice. And that's really the big deferral you're going to get, because while you would get a deferral on the capital gains too, well, those funds don't realize much in the way of capital gains. They're very tax efficient. And therefore, any gains that accrue and the dividends, in other words, any increase in value over that $100,000 you put in initially, when you start to take that money out, it will be taxed. Now, if you left it in the fund without the annuity wrapper, it would be taxed at the capital gains rate, which generally, except for some exceptions due to the healthcare tax, is a top rate of 20%. Now, your top income rate could be much, much higher than that. What happens when money comes out of an annuity is it all gets taxed. Every penny in increased value gets taxed at your ordinary income rate, which is another huge disadvantage, which is why I have such a difficult time seeing an advantage at all in annuities. They tend to do well for others, but not as well for the investors, and in almost every case, almost, can't be absolute about anything. I do not believe in absolutes, but in most cases, you can find a better alternative with better tax advantages without paying those extra fees. As you said, it's pretty substantial, 0.15 for the index fund versus, 0.015 versus 0.35 for the annuity. So that was a really, really good choice on your part. So that was a great calculation on your part. Yeah, skip the annuity. Totally skip it. Now, let's go through the ways you can contact me again. You can call 855-935-TALK. You can go to talkingrealmoney.com, click on the contact button, and send a question in just like that one. Or you can type your question in, which is still the preferred method of the vast majority of listeners. So we're going to take one of those right now. And actually, I'm going to move this one out of order a little bit because it's timely. It's actually related to the podcast, I believe, yesterday's podcast. So this is really timely. The topic is gold. I love this thing. I love this. Thanks, Tim. Why would you say such half-truths about gold? I did. Correct. It is not an investment, but that has nothing to do why it is hitting all-time highs against the U.S. dollar. Have you never listened to Peter Schiff? And the impending dollar crisis, or currency crisis, or possible loss of world reserve currency? Many think it is possible/probable. Who is going to continue funding our reckless deficit spending after Trump suggested withholding of interest and/or principal payments to China? Also, gold outperformed the S&P 500 in 2019, so stick that in your pipe and smoke it. Okay, I threw in the smoke it part. Enjoy the show, Tim. Oh, Tim, why did you make this so easy? You made it so much easier when you invoked the name of Goldbug Peter Schiff. Peter Schiff. I've been listening to Peter Schiff for, oh my gosh, decades. Peter Schiff has been pushing gold for as long as I can remember. Peter Schiff has been saying for about 20 years now that gold will go to many thousands of dollars any day now. Any day now. He said that in the 2000s. So just before 2008, Mr. Schiff said that, and I'm going to give him credit, got one thing right. He was saying that the U.S. equity markets will crash just prior to 2008. He was right. They did. He said that the U.S. dollar would go to zero. He was wrong. It didn't. That we would be decoupled from the rest of the world. No, that didn't happen either. Yep, the U.S. equity markets crashed. That was the only thing he got right. And instead of the world falling into a total disaster, we recovered. We recovered in 2009. Then Peter went on afterward to say over and over again, and let's see, I found one in 2011 where he said gold was going to $5,000, and then again in 2012. And then when questioned about it in 2014, he goes, well, I got the timing wrong. Eventually it will. Well, guys, stopped clock. I invoke stopped clock. Eventually, you're wrong. You got to admit you're wrong. Just admit you're wrong, because Peter Schiff has been more wrong than he's ever been right. And yet what fascinates me, and this is what fascinates me, by all the idiots making claims about the future, and you got to be an idiot if you claim you know the future. I'm sorry. Really? Come on. He wrote a book. I mean, the coming economic collapse. Oh. You can look it up online. He has been wrong more than he's been right. And when you look at a chart of gold, and I'm going to pull up the little old gold chart right here, the price of gold has not gotten back to its 1980 level yet. So where am I wrong? Gold is not worth messing with unless you're out on the fringe, and I really truly believe it's the lunatic fringe, but that's okay. You're allowed to be a little crazy if you want, unless you're out on the fringe, who actually believes that the U.S. economy is about to completely collapse. But I gotta tell you, given that we are the leading economy on the planet still, if the U.S. economy totally collapses, you say, who's going to buy our debt? Well, who's going to buy China's stuff? China will continue to give us debt because we're buying their stuff. President Trump is an aberration. He's a historical aberration. Will the U.S. economy get into trouble at some point in the future? Absolutely. Will it collapse completely someday? Maybe. But if it completely collapses without another economy stepping into that void, then the whole world is in trouble. And I believe that gold is not your best place to be because it's inedible. It's inedible. And you're going to be wanting food. And it's an awful, awful expensive metal from which to make bullets. So I'm sticking by my guns. I don't care what it does in a short period of time. Gold has had big spikes in short periods of time. It absolutely has. And it has also absolutely fallen back from those big spikes pretty consistently, going back on a couple thousand years. So would I suggest buying gold? Never, ever, ever. Call 855-935-TALK or go to contact@talkingrealmoney.com. It's talkingrealmoney.com/contact and send in your questions for the podcast. So now there are so many ways to get in touch. 855-935-TALK is the phone number to call in, the contact form, all kinds of ways. Oh, and by the way, let's just compare. Here we have a 800 number, a phone call. Let's compare that to the great quality of the call earlier that came in through the contact form at talkingrealmoney.com. Oh, this one is way too easy. Thanks for ending the podcast with a really easy one. This one's just a breeze. Absolutely invested. Absolutely, 100%. Absolutely invested. Don't pay off that house. 3.25%? That's great. I just financed at 2.75. So you're only a little bit above where I am, and I just did it today. So that's a great rate. And you have a high risk tolerance, which is another big benefit. Oh my gosh, what you should do is just be in a diversified equity portfolio. And let's assume, just worst case scenario, you didn't say how old you were, but you sounded young. So let's say it's there for 20 years, and your mortgage is also 20 years. And let's assume that the stock market does half of what it did over the past 90 years. 90 years. You're still going to make 2 percentage points a year more than the mortgage is costing you. It's a no-brainer. It's a no-brainer. You're going to end up with a lot more money over 20 years. As a matter of fact, at 5 or 6% per year, you're looking at 20 years. You're hitting on a triple pretty soon. You're getting really close to that. In your case, I'm not even going to make the well, it's a lifestyle thing argument, because in this case, we're talking so much more money. Even at 5% a year, you're looking at over $1 million in 20 years. Yeah, keep the mortgage. And if you guys want to call, 855-935-TALK is the number, 855-935-8255. It's free and easy, or go to talkingrealmoney.com and just hit that there contact form. What else did I want to mention? Oh, yeah, if you need help with your money, if you have a really detailed question, the kind that does not lend itself to a quick call, typed in question or something to a podcast, this is an offer that is an absolute deal. We have an investment advice firm called Vestory. It's a 100% fiduciary firm, and we have always believed that everybody deserves help, even if they're not our clients. Now, will we manage your money for free for the rest of your life? Absolutely not. That would be dumb as dirt. But will we help you? Yeah, we will. You want to figure out how to better allocate your 401k, or whether you should take a lump sum or money over time, or whatever it might be. Is your portfolio right? Go to either talkingrealmoney.com or go to vestory.com and set up an appointment with one of our advisors to meet with you online or on the phone. And I promise you, they'll help you for free with no obligation. And I know you're worried. Oh, they're going to give me a sales pitch. I promise you, they won't. They won't. We don't do that. So check it out. Go to talkingrealmoney.com or vestory.com and keep listening to the podcast, and tell a friend or 2 or 10. And that's it. I am Don McDonald. I have had a great day. Thanks for being a part of it. And I'll talk to you soon.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.